We are back at it again here with another video with the Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for returns for to smash that like button. Tell me when you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the SPY. We're going to talk about the S&P 500 index, the NASDAQ, and the overall market, and CPI data. We got some things to talk about because in the charts, I noticed a hidden divergence that can tell us some insight on when we might peak on inflation. I know it's kind of like a topic that a lot of people are like, well, it seems like it's overheated. Well, that's what we're going to talk about today. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us. And we're going to cover everything here with the SPY. And today as well, our new release, the SPY bot, sent us a notification of a bear indicator at around 11 a.m. And from that moment forward, put options 3 to 5x within an hour. And as you see it popping up on the screen, they were up 300, 400, almost 500% at their peak, guys. And this is a new release that keeps us up to date, sends us direct notifications over at the Discord to have an edge over the markets within the volatility to maximize on opportunity. So we're going to break it all down here in this video, but let's talk about the opportunity that I mentioned today that nearly reached home run territory. So the opportunity I mentioned this morning turned out to be phenomenal within the volatility. And if you guys want to know about these stocks and opportunities early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors all looking to learn and grow together. So the one stock I was watching this morning was IRNT, and it turned out to be phenomenal. Within a matter of minutes, it took off 18% plus, guys. We mentioned this one in the pre-market as it was pulling downwards towards the bell. It started to have some volatility there, dipped down, reversed, right? You could see it there on 42 vision, got that bull indicator full strength and hit a highest point of 18% plus, dipped back down and took off for a second opportunity of 10 to 15% as well. So collectively altogether, it gave about a 30 to 40% opportunity within the two dips and the rips, guys. If you guys want to know about these opportunities early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us. Let's jump into these charts. So here we are with the SPY. We're going to talk about the S&P 500 index, the 10-year treasury, which actually reached 2% in total. I stated plenty of times we were going to see that eventually. We're going to talk about the NASDAQ, and here we have the SPY because you could see the pre-market and the after hours. Now, in the morning, the SPY dipped really hard and ripped. This was a lot of dip buying, but quickly things shifted and it turned into a big bull trap. Like I stated earlier, our SPY bot sent us out at 11 a.m. a bear indicator based off the 5-minute. And from that moment forward, there was even a fake out. And then things started to accelerate really quickly, especially after some of the Fed members' comments that were stated to see up to 1% or 100 basis points by July, which is what a lot of people in the market were expecting by the end of the year or a few months out, not just in 2 months, which was really fast to actually think about to be a possibility. Now, the SPY fell downwards. Put options were up 3 to 5x. I mean, it was phenomenal in the volatility, but in the overall market, it is actually causing a lot of pain, right? So what is it that's causing all this pain? Well, one of the first things is the 10-year treasury, okay? Spiked up to 2%, 2.5, right? 0.5 right there, excuse me, 0.05. And we have been tracking this together, and I've been stating to everyone that this has been in a very subtle way spiking up and no one's actually noticing it, and it's not affecting the chart just yet, but a lot are speculating that this could reach 2% or above it. Now, we're at 2%. If we can level off and consolidate here, there might be some strength in the markets in the near future after the rate hikes and some of the fear and things settle down. But if this keeps on bouncing around here and goes even higher to 2.1, 2.2, 2.3, 4, 5, so forth, that is going to cause further fear. And if we go over to the VIX, right, and we look at it, it was spiking up big time today. Now, I rejected 24, came down and spiked back up and rejected 24.77. If this continues to fight to go higher, that's going to be important to watch as well. The 2%, we want to kind of level off here, kind of find a consolidation or cool off. But if this keeps on spiking higher, that is going to be a big sign that the bond market is pricing in higher rates, right? So when you look at the SPY, I'm going to pull up the Ultimate 42 Vision Bull and Bear indicators, which you can now gain access to as well. The link is down below in the description to receive the clarity you deserve within the volatility of the markets to maximize on opportunities. Check it out. The link is down below so you can see clearly through it all. Now, when we look at it here, right, the S&P 500 index based off the SPY, there was a lot of volatility, right? The last bull indicator popped up on the 8th, lasted all the way until today in the pre-market, and then things fell really fast, and then all of a sudden things started to pick up, and this turned out to be a big bull trap. And you could see that there because based off when the SPY bot sent out the notification and things started to fall, and just the chart overall, and this many bull and bear indicators in one single day based off the 30-minute, that's a lot of volatility. But we ended up lower, and a lot of investors were actually trying to digest in the overall market. Like I stated this morning over at the Discord, that the market was trying to digest the CPI data. And then on top of that, we had one of the Fed members state that they see big hikes coming in for July, by July actually, not for July, but by July. I like to see 100 basis points by July. That's what they stated to Bloomberg News. But something interesting in this article states that within minutes, his view became the market's view, and with rate futures contracts now fully pricing in an increase in the Fed's target range of its policy rate hike to 1% to 1.25% by the end of its policy meeting in June, with some bets even steeper rate hike paths. So this article here, I just read this as I was making this video because I read this earlier this morning. I saw these statements, but now it's stating here that if his view became the market's view, have we bottomed? Could we actually rally in the near future? We're going to have to see. This is just speculation right now, but I'm going to share with you guys what I noticed in CPI data that is actually a hidden divergence, and that's what we're going to talk about, because this also spiked the catalyst even further to bring things down, right? We'll have to see how things play out tomorrow, but CPI data, talked about it all week. I stated that we needed to pay attention to core CPI and CPI, and let's go ahead and look here together at what CPI data showed and where's the hidden divergence that I see. So CPI data altogether came at 7.5, guys. Now I squared up here the ones that are actually the highest and creating the highest inflation overall in the total here of 7.5, and also the ones that grew from December to January substantially if you look here at some of these lines. I mean, this one right here, it just shocked me. I mean, it was negative and now it's even positive to 9.5. That's huge. I mean, it could have been something smaller than that or closer to 3.5 or 2 or something. That was big. But let's talk about the hidden divergence here. So one of the hidden divergences that I see, which is super important and we need to pay attention to it, is the all items section, right? We basically peaked in October of 2021. No one's talking about that. Then we went down in November. December we went down, and now we're kind of flat here, which is significant because the fact that this is month over month and this is year over year. Everyone's focusing on this, but if you really think about it, we're kind of sideways and flattening out here on December to January. If I draw this out as a line, right, it would look something like this. We went all the way up to 0.9, we went back down to 7, and now we're at 0.6, 0.6, and if we stay flat or go back down to 0.5, 0.4, then eventually all of this will start to go lower. Because if things are going down month over month, it's going to create that significance over the hidden divergence that no one is actually paying close attention to. I think this is super important because the way this is mapping out is we probably peaked on the month over month back in October, slowly went down in November, and right now we're sideways December to January, and we want this to stay sideways or go lower if possible in February, March, and so forth, and eventually this will go down with it because this is the average as well of all these items over time plus what all of the items are showing. But The total for the month here was 0.6, which is near expectations for the month over month, but the year over year was a little bit hotter than expected. So with the first rate hike coming in March, either we have peaked, we're getting close to it, we're going to have to see. I'm not trying to create optimism here. I'm not trying to hype things up. I just want every single investor to realize this because I noticed it as I was reading the data. No one's really talking about it. We still need to track this one as well. We want this one to inflect downwards, and there's going to be some turbulence moving forward, and we're going to look at it together right now. Some of the key levels I'll be watching. So let's go ahead and pull up here the S&P 500 index, and the first thing is we fell right back to the consolidation area, and our lowest point today was 44.83. If that gets broken through, the next support is down here at 44.51, and then the next key level I'm watching is 43.32. Okay, those are the key levels right now based off the 30-minute that I'm watching to see if we break through this consolidation area and go lower, or if we end up in this consolidation area to retest the lows. That's the first thing. Now on the NASDAQ, same thing. We need to see if it breaks through 1380.64. The lowest point today was 14.106, 105, give or take. I'll watch that carefully. If it breaks through that consolidation and goes lower, I'll be watching the consolidation area down here, which starts off at 13.410. These are the key levels to the downside. Now to the upside, for the NASDAQ, 14.505, and for the S&P 500 index, it's going to be 45.98. I would just round that up to 4,600. These are the key levels to watch moving forward. I'm going to continue to track the S&P 500 index with 42 vision. Look at what the SPY bot is doing within the volatility. And one of the main things I want to share with you guys is the 1 day things are getting kind of choppy, but we still are under a bull indicator. But the 1 week is sitting sideways here, and we are in a bear indicator. We need to see if a bull indicator pops up and negates it, or if this is all a fake out or bull trap and continues to go way back down towards these lows and breaks through it. And this bear indicator stays true because when it pops up, like I've showed before in 2018 and also in the 2020 crash, it lasts for several days and weeks, and it doesn't pop up every single day. So I'm tracking it to see if it gets quickly negated by a bull indicator, or if this bear indicator is holding true and we're not out of this with the bearishness. As always, guys, thank you guys so much for watching, and let's make some money.